note that Tesla had a GAAP loss for the year of 2019 after a loss for the year 2018, which was after a loss for the year 2017, 2016, 15, 14, 13, 12, 11, 10, 9, 8. All of Tesla's history, they've lost money based on generally accepted accounting practices.
The Tesla Q podcast is for informational purposes only and is not intended for and should not be used as financial, investment, or trading advice. Research associated with fiscal decisions should be conducted elsewhere. The host of the show possesses no license or credentials to warrant accepting advice based on what is heard on the Tesla Q podcast. Additionally, even though the host and guests may hold positions in companies discussed on the show, they don't have insights into the next time step of the simulation. Therefore, do not make any financial decisions based on the contents of this podcast.
Hello, and welcome to episode number 56 of the Tesla Q podcast. I don't yet have a title for this episode, but I'm just going to start talking. As always, if you'd like to be a contributor to the podcast, go to patreon.com/TeslaQpodcast and become a monthly contributor. I have not yet had a chance to go through the quarter 4 2019 financials, which was, of course, for the full year 2019, to add those into my spreadsheet. As I think I mentioned on a prior episode, I did throw out some estimates before the quarter 4 results were announced. My estimates were fairly close. I was low on revenue, a little bit high on earnings per share with my case. My case was based on other people's cases. I'm going to throw in the actual results and hopefully get that published this weekend. I've been really, really busy at work lately. That's why I haven't done an episode since number 55. And since episode 55, of course, we've had one of the most crazy stock price runs, maybe of all time, with Tesla's rise after earnings. Immediately after earnings, the price shot up to about $650, held at $650, pretty much through the conference call, pretty much through the day that Thursday and Friday, the very end of January. And then on Monday, it gapped up and went on a crazy, crazy run. And on Tuesday, February the 4th, I think it was, it hit a high of $968.90-something. I forget the exact numbers. I'm sure many of you listening probably know the exact numbers. And late in that day, it had a greater than $100 per share drop within 7 minutes. So that was fun. Subsequent to that, it's moved around a pretty good bit. They filed their 10K and immediately raised what ended up being $2.3 billion of capital. It was the normal part of the offering was $2 billion, and then the green shoe portion was 300 something more million. Elon Musk bought $10 million of that, and Larry Ellison bought a whopping $1 million of that raise. When he initially became, or just before he became a director of Tesla, he bought $1 billion of Tesla stock. It was, I think, exactly 3 million shares. Nice round number, which I think I did the calculation earlier today at $900 per share, and it was worth about $2.7 billion, his total stake. So I'm recording this on February 20th, 2020. A nice round number date. It's not the palindrome like 20202, but oh well, it's still close. So into the episode. So as I said, crazy share price. Tesla has announced their actual results. I haven't dug deeply into the results, but I will just point out that the revenue for the second half of 2019, I think, may have actually been down from the second half of 2018. The numbers were very, very close. The amount of GAAP profit that Tesla made in the second half of 2019 was lower than in 2018 on many, many more deliveries. So that's one side of the narrative. That's the side of the narrative that I have paid attention to, much to my detriment financially. But that that side of the narrative is completely ignored by the other side of the trade, where people are looking only at the fact that, oh, they're about to release the Model Y. They're about to have the China Gigafactory humming along full speed. They're about to tear down that forest in Berlin, which is only for cardboard anyway, a man-made forest. Going to have a new Gigafactory in Berlin. Buffalo. What? Why are you asking about Buffalo? Surely they're going to have their 1,400 employees there and not have to pay the $41.2 million fine or penalty, whatever word you want to use for it. Cybertrucks right around the corner, semis right around the corner. Everything is awesome. That's the side of the story that the bulls are seeing. And then people like me see the GAAP profit number. Note that Tesla had a GAAP loss for the year of 2019 after a loss for the year 2018, which was after a loss for the year 2017, 2016, 15, 14, 13, 12, 11, 10, 9, 8. All of Tesla's history, they've lost money based on generally accepted accounting practices. There's a reason that generally accepted accounting practices became generally accepted, and that's because they try to levelize and give a view of what the normal run rate profitability of a company would be. And for Tesla, it's negative. They lose money, they burn cash. That's why they raised $2.3 billion at the beginning of February, or middle of February 2020 here. When 9 months earlier, in May of 2019, they just raised $2.8 billion of cash. So $5.1 billion within a 10-month span of outside capital raised. That for a 17-year-old business, 16, 17-year-old business, there are definitely two different views from which this company can be looked at. And clearly, I hold one of those views and other people hold a completely different view. And we'll see what happens ultimately. My guess is that Tesla will raise outside capital again at some point in the future. That Elon Musk's words that the business is self-funding and will be cash flow positive from here on into the future, other than maybe a few exceptions for product launches. And 2 weeks later, let's raise $2.3 billion. I will fully grant that the situation changed because the share price when he made those comments was at about $650 per share, and subsequently it got as high as $968 per share, and ultimately they raised capital with equity at $767 per share. So I fully grant that the situation changed. The share price was higher, and it was a very, very advantageous time to raise capital. Why they only went for $2 billion, ultimately $2.3 billion, and not for $10 billion to fully clean up their balance sheet, that's another question. Likely, Elon did not want to have that level of dilution. So that's kind of what has been going on in Tesla land. A couple of things I'm going to do in the future, or plan to do in the future. No guarantees. I definitely want to plug in the actual numbers from quarter four into my spreadsheet. And after I do that, I want to make a couple quarter one scenarios based on my estimated delivery range for quarter one, which I have held steady to date since late in December or at least early January. I've stuck with a range of 78,000 to 88,000 deliveries for quarter one 2020. That's my estimate. I've yet to see anything that makes me think that range will be off. Every data point that I've seen so far makes me think that range is still likely to be accurate. I have no idea if I'm going to end up going above that range or below that range, but based on the Netherlands, Spain, and Norway, and the very, very limited deliveries that they've had so far in quarter one, that doesn't make me think that the 88,000 will be too low, definitely. Based on U.S. activity, based on the Troy Test-like tracker, those don't make me think that 88,000 is going to be too low. Maybe they'll have another end of the quarter push like last year. That's possible. And at such a time, I may have to revise my estimate up to like 90,000, maybe 90,500 deliveries for quarter one. We'll see about that. But I did actually write out some notes. So far, I've just been rambling. That's what happens when you don't do a podcast for a while. So that's kind of what Tesla's been doing. I have listened to a number of good podcasts recently and watched some other good media. Just recently, I watched the movie Ford versus Ferrari. Highly recommend it. Gives a great picture of some of what was going on in that early 1960s automotive era with Ford and with Ferrari and the Le Mans race and all that stuff. Ironically enough, just before I saw that movie, I listened to the Ford versus Chevy series on the Business Wars podcast, which I highly recommend. Some of the same characters were in both. Lee Iacocca was a main character in the Ford versus Ferrari movie. He was also mentioned in the Ford versus Chevy podcast. Also, another thing that played kind of into that same era, it was the John DeLorean movie, which was done by Tamir, I forget his last name, but the guest on episode number 10 of the TC's Chartcast. The movie was called Framing John DeLorean. Really good movie. If you haven't seen it, highly recommend it. Highly recommend listening to the podcast interview with the producer of that movie. But John DeLorean, of course, early in his career, moved up through the corporate ladder of GM. He played a huge role in the Pontiac division with the GTO and I think one or two other vehicles. I think he was involved with the Le Mans, the Pontiac Le Mans vehicle, which ironically enough is also named after the same race as was the main race in Ford versus Ferrari. So also, I'll point out that the name GTO that was used for that Pontiac model, which was the major claim to fame for John DeLorean early on, was named after a Ferrari model. And then the Pontiac Le Mans was named after that racetrack in France. So John DeLorean did kind of steal some names from Europe with some of his vehicles. So then just today, I was actually driving a lot. I'm recording this late in the evening, and I actually haven't checked Twitter in something like 7 hours or so. So I may be way behind on stuff. Maybe some huge news is broken that I'm not going to cover in this podcast, but I wanted to go ahead and get a new recording out there just because it's been too long. But today, since I was on the road a lot driving, I finished listening to the DeLorean series within the American Innovators podcast. So that podcast series is hosted by Steven Johnson, who wrote a really good book about, I forget exactly the name of it. It's on my shelf here in my room. But the book was about some different innovations throughout history and how they've impacted the world. Some of the big ones are glass and air conditioning, couple and several others, but he just tells the story of how they evolved and developed, and he does similar storytelling within his podcast. So he had, I think it was either a 4 or a 3-part series on John DeLorean. So obviously it covers a lot of the same things that the movie Framing John DeLorean covered. One thing that I noticed that was a little profound, maybe not that profound. I'll get to some more profundity in a bit, but a parallel that I hadn't thought of before, hadn't noticed before, when John DeLorean was acquitted of the cocaine trafficking charge because he was set up by the government, basically. After that happened, he spoke some words in the courtroom. I forget exactly what he said, but it reminded me of when Elon Musk was found not liable of defaming Vern Unsworth, which I think was the wrong outcome in that situation. But Elon, of course, said, my faith in humanity is restored. So both of them had a courtroom exoneration moment where they then had a quote. And that was something I hadn't really noticed before, but I noticed it earlier this evening as I listened to that podcast. But of course, there are tons and tons of other parallels between John DeLorean and Elon Musk, many of which have been covered ad nauseum. The love of stainless steel, the gull-wing doors, the naming of the vehicles, like the GTO and the Le Mans, that kind of is a parallel to Elon's naming of normal factories as gigafactories, which is something that's been brought up a number of times on Twitter. I think I even tweeted it earlier today. But as I said, I recommend listening to that series. So go listen to the DeLorean series on American Innovators. Go listen to Ford versus Chevy on Business Wars. Watch Ford versus Ferrari if you haven't, which was also a high recommendation by Machine Planet, who was the most recent guest on episode number 11 of TC's Chartcast. Go watch Framing John DeLorean, the producer of which was guest number 10 on TC's Chartcast. And one more thing that I'll say about the DeLorean series on American Innovators. There was the last part is actually a discussion with, I think, a senior editor at Jalopnik who wrote a book. I forget the title of the book. I apologize for that. But the premise of the episode is talking about autonomous driving, which is something that we've talked about on this podcast, of course, and is a very, very hot topic of conversation for all things relating to Tesla almost. But one particular part of that interview really caught me as being very, very profound. And it was at about the 26:15 mark of the podcast. The timestamp may be off a bit, but it was from about the 26-minute mark to about the 29-minute mark. And it's a discussion where the author mentioned that autonomous driving is going to cause the death of the journey. And his premise there was basically that once autonomous driving is proliferated throughout the world, that the process of getting places will not be nearly the same. So rather than driving, being fully engaged, looking at your surroundings, all that good stuff, you'll basically just get in the vehicle and you'll start at one place and you'll finish at another place. You may watch a movie or read or whatever in between. So it'll be a totally different process, and a piece of human life that has existed from the late 1880s through 2030 or whenever autonomous driving takes full hold is something that we'll lose from that point forward. So he pointed out that this time in history of human driving is going to be a unique time in history, which the safety aspects that will ultimately come about once autonomous driving is adequately safe, which it's not yet safe to get behind or get into a Tesla and not pay attention if you're supposed to be behind the wheel. So keep that in mind. But just the process of getting places, seeing your surroundings, is something that future people won't have the same experience that people today have. And I actually, I made my wife listen to that clip before I started recording this episode, and we had a little discussion about it. And she's a little bit younger than me, not a ton younger, but even just the difference between our generations, she has a much different experience with driving than I do as an elder millennial, I'll say. But just the idea of seeing your surroundings made me think back to another podcast episode I listened to recently, which I just listened to yesterday. It's episode 11 of TC's Chartcast, and the part where Machine Planet talked about how much he loves the view from 2,000 feet, which that's a view that not a whole lot of people get, because on commercial flights, you've got takeoff, and then within probably just a couple of minutes, you're higher than 2,000 feet, and ultimately you end up at 29, 30, 35,000 feet, whatever. But from 2,000 feet, you can see a whole lot more than you can see from 30,000 feet. And the words in that episode from Machine Planet talking about that fit in somewhat with the idea of the death of the journey and the experience of driving and all that stuff. And since I was driving today for something like 4 hours, I had a lot of time to listen to podcasts. And I find that when I'm driving or when I'm at the gym working out are my two best times to listen to podcasts. And ultimately, when self-driving comes about, I'm not sure that I'll be able to have the same focus on listening to a podcast as what I have today while I still have to be engaged with the process of driving. So just something to think about. I haven't read that book from that guy yet, and I forget the name of it. I'll try to look that up and put it in the show notes, but I would definitely like to listen or read that book. Definitely the part about the death of the journey at some point. But back to Tesla. So we had the crazy share price spike. Some of the speculation that a lot of people have had, myself included, of why the price has gone up so much since December, other than the whole idea that Elon is fully regulatorily immune and all that stuff. Another piece of the idea is that Chinese money has flowed into Tesla. Also, as we found out this week, Renaissance Technologies, as of December 31st, 2019, held something like 3 million something shares of Tesla stock. So they had a huge increase in their position in the fourth quarter of 2019. I have speculated, and I have no way to find out if this is correct or not, other than circumstantially when the quarter one 2020 institutional holdings numbers come out. But I have speculated that $100 in 7-minute price drop on February 4th, 2020 may have been a partial liquidation of Renaissance Technologies stake in Tesla. Have no way of validating that. It's purely speculation on my part. There are definitely other people that could have been a part of that really quick sell-off. I don't know. I'm not saying it was illegal or anything. I'm just saying that a large holder apparently sold a lot of shares at that time, and Renaissance Technology is my guess for who that is, because it was very close to the top, like very close to a top tick with that sell-off. Subsequent to that, today on the 20th of February 2020, the share price got pretty. Actually, I guess it was yesterday. As I said, I've been really busy at work, so I haven't been able to watch the price nearly as closely. But the share price did get pretty close to that same high level, but it didn't quite get as high. So we had a lower high, which some people might think is notable. We'll see what the share price does from here. As the disclaimer says at the beginning of every episode of the podcast, we don't know the next time step in the simulation. Otherwise, we could be like the Reddit Wall Street Bets people and just buy our outside the money calls and get tons of money for tons of tendies and whatever else. So, very, very similar to the price action in Tesla since, I'll say, December 10th, maybe as early as December 9th of 2019, when there were many, many outside the money call options day traded. A lot of them weren't held overnight, but that acted to drive the price of Tesla's stock up. Obviously, it's hard to tell how much of Tesla's share price rise was related to that phenomenon versus Chinese money coming in versus Renaissance Technologies building their large position versus a number of other things that also contributed. The main thing, of course, was that Tesla printed a profit for quarter 3 and quarter 4 and an adjusted profit that was higher than the GAAP profit, of course, because they have large amounts of stock-based compensation. And, of course, they printed the $1 billion of Tesla reported free cash flow for quarter 4 2019, which numerous places you could look and see adjustments that make that look far less rosy than Tesla wants people to think that it looked. Particularly the $711 million of increase in accrued liabilities and accounts receivable. Those numbers may not be exact, but that's what I remember in my brain. And you can look at them and see the change very easily by comparing the balance sheet from December 31st to the balance sheet on September 30th. So if you think that my numbers are off, please do go double check for yourself. But ballpark wise, they're not off. They're right in line. So while Tesla wants you to think that they had $1 billion of free cash flow in quarter 4 2019, I highly recommend looking deeper at the numbers than the numbers that Tesla reported. Look at them for yourself. Look at today's share price, and eventually gravity will work again. Eventually the rockets come back down and land on the barges, to use a really bad analogy that actually gives a little bit of credit to Elon Musk for one of the things that he apparently has accomplished as the CEO of a company, probably by not overly meddling in the affairs of that aspect of SpaceX's business. A couple things that I failed to say anything about. I think it was a little bit before the Tesla raise was announced, the idea of a IPO for Starlink was floated. Haven't heard any update on that since the day that the idea became public. Also, Virgin Galactic, ticker symbol SPCE, has had a meteoric rise recently, which I think has largely been driven by the Reddit wallstreetbets subreddit. That's what it's called, a subreddit. Had a brain fart there. But I started to say this earlier, didn't get to it, but the aspect of Tesla's share price rise that was driven by the outside the money call options that were purchased, which then caused the market makers to have to delta hedge their positions and actually buy Tesla shares, which caused a feedback loop. That whole mechanism, because of Tesla, I feel like this is partially speculation on my part from observing the market and what's happened with a few other companies, but apparently that mechanism within the market has become fully recognized by a ton of people and has been picked up by this subreddit, Wall Street Bets, and subsequently with Virgin Galactic, SPCE, earlier this week with Plug, PLUG, Ballard Power Systems, I forget their ticker symbol, and today, February 20th, 2020, with Lumber Liquidators, people have used this bit of a glitch in the market to purchase call options, which then forced market makers to buy shares, which has caused massive share price rises for a couple different companies. How much of it has been driven directly by the Redditors on the Wall Street Bets subreddit, I don't know. But there's clearly been a correlation, especially today with the Lumber Liquidators thing. That was pretty clearly driven by the post that went up on Reddit. So Tesla Charts has pointed out that this is basically market collusion. It definitely is collusion, as it's a coordinated effort from multiple people. I tweeted that I am interested to see what happens from this whole phenomenon. I think that eventually the market forces at play will squash this this practice, but maybe it'll take regulatory action. I don't know. It's been fascinating to watch. So if you go to Reddit and just type in Wall Street Bets, you'll find the subreddit. I don't know how best to navigate that forum. I'm a Twitter person. One thing that people have suggested to me in the past is that I check out the Real Tesla subreddit. I've heard good things about it. Lots of people that are skeptical of Tesla's business practices that post there. Some really smart people there. I was even suggested to interview the moderator of that subreddit. but I never have gotten around to doing it. Twitter takes up more time than I have actually, so don't have time to add Reddit in as well. But if you're interested in the markets at all and hadn't heard about that Wall Street Bets thing this week yet, it's fascinating to watch. I highly recommend watching it. I do not recommend partaking or following the herd without doing your own due diligence about legalities and all that good stuff. So do pay attention. Beyond that, do your own research. I appreciate you listening. Sorry that I hadn't had a new episode out in a while, but life happens sometimes. So I do hope to put a new episode out again sooner than this last one. We're almost to the end of February. Another thing that I hope to get to do in the near future, but may not find time for, is to go back and listen to the March Madness series of episodes from the podcast from 2019. I recall that there was a crazy amount of crazy news with Tesla last year in March, and just before March, especially with the February 28th Model 3 announcement thing and the store closure announcement, and which was then reversed on March the 11th or 10th. So I hope to go back and re-listen to that. If you want to go back and re-listen to it, please do. And I may do a recap of that here in the near future as an episode. Who knows? But I appreciate you listening. If you want Shorty merchandise, go to evacuationboy.com and find some there. Listen to the Chartcast. Listen to some other good podcasts. And be careful with Tesla stock, definitely. As Montana Skeptic has pointed out numerous times, it's a crazy, crazy thing. So be careful out there. Have a good one. Have a happy leap day coming up. And thanks for listening to the Tesla Q podcast. Bye-bye.